So earnings this quarter, $1.5 billion. It was a good, solid, robust result, both in terms of earnings and cash flow. In the upstream, we had the benefit of the Abu Dhabi concession that came online this year, plus a stronger favourable environment. In downstream, we saw a stronger supply and trading result this quarter versus last quarter, lower costs again, and actually lower turnarounds.
So these first set of results in 2017 tell me we're on the right track. We're off to a good start. The company is consistently generating cash. Projects are on track. Underlying profit is 3 times what it was last quarter. So the businesses are delivering on that. We need to keep consistently disciplined about our spending and how we spend our capital, and as always, focus on safety and reliable operations.
As we laid out with investors at the end of February, this year is very much back-end loaded. We've got the big projects coming on stream in the second half of the year. We have one of those online already this quarter. The rest of the projects are on track and imminent. But as they start up, we start to get the revenues through into the second half of the year. And of course, in the first half of the year, we have the payments going out related to Deepwater Horizon, which creates some headwinds for us as we go into the middle of this year. But as we get into the second half of the year, we need to continue to maintain our focus on cash, and things will then start to get back into balance as we exit 2017.
The highlights of the first quarter in 2017 for me are really that all of our businesses are firing on all cylinders. Upstream, downstream, alternative energy, and our trading operations have been really good. The uptime of our assets this quarter have all been around 95%, which means it's working. That means safety's working, reliable operations, reliable cash flows. We've started up the first of these really important 7 major projects, with the first one being in Trinidad, an onshore compression project that will add production. We've got 3 more coming on in the next month or so.
And of course, those projects bring on 800,000 barrels a day more production over the next 2 to 3 years, out by 2020, which is a big indicator for the marketplace in terms of the recovery of the company. And of course, what that does is underpin the dividend that we declared today of 10 cents per share into the future, and ensures that that dividend is sustainable as those new revenues come on stream.
This year in 2017 is a really important year for the company. We just laid out our growth plans, went out to the market, laid out a strategic direction all the way out to 2021. It highlights the growth that we have in these big projects. And right now they're running about 15% under budget and on time, which is great. We've got great growth prospects in the downstream. We've got projects, for example, we've started up in Mexico in retailing. We've got to keep delivering these projects within the CapEx range that we set out, $15 to $17 billion a year. This quarter came on bang on right around a number of $4 billion, so we're on track for that. So we've just got to keep delivering consistently, safely, and it's going to be a really good year for the company.